We are officially in a buyer's market in the Phoenix area again, and there's a new report showing days on market is the highest it's been since 2019. Also, we're going to talk about what are the chances your home is actually going to sell, because sellers, it's not looking too great, although I do have a glimmer of hope for you. So let's talk about it. Thanks for joining me today on this Wednesday. So we're officially in a buyer's market. Let's look at the Cromford report, the Cromford Market Index, as we do every week. They say that we are at 88.5. So if this is new to you, anything under 90 is considered a buyer's market. Our demand index is at 76.8. So that is about 24% below normal. And our supply index is at 86.8, which is about 14% below normal. So our supply, once again, is outpacing demand. And we all know that mortgage rates are not encouraging buyers to get out there, and affordability as a whole. So demand is just not keeping up with supply at this time. And that is why we are seeing this buyer's market situation. Now, let's talk about what this looks like on a chart. So you can see the CMI, as we've started the year, has began to go down. And if we look at 2024, we saw a similar trend, although that downward trend didn't start until we got into, looks like March, like late February. And, we started the year with the CMI going up for the first week, staying stable, and then starting to go down. And I like to look at previous years too to see how this differs. So even in 2023, which was not a particularly strong year for us, the CMI went upward until we got to about the summertime, and then it started to lose some steam. If we look at 2022, that started very strong, and then it was about May when mortgage rates started to go up. So no surprise that we saw this big dive down in the CMI. But 2021, same thing, kind of a peak towards the beginning of the year, curving down. 2020, similar, except then we had COVID in March, and that was this big dip. But if we go back to like 2019, 2018, 2017, and I'm going to take off some of these other years here, you can see for the most part, like we usually start a little bit high, maybe have a bit of variation, and not as many big swings in the CMI as we've seen over the last few years. So although we're officially in a buyer's market and the CMI looks like this, should we be concerned? I guess the question is, how much longer is it going to go down for? And the only way to answer that is to know what's going to happen with supply and demand. But as it stands right now, we are seeing higher days on market. According to Redfin, the typical home is taking nearly 2 months to sell. It's the slowest pace in 5 years. Now, of course, Redfin is looking at this nationally, but we're going to look at what's going on in Phoenix as well. The typical U.S. home listing went under contract, sat on the market for 54 days before the seller accepted an offer, which is the longest span since March of 2020. At this time in 2022, the typical home was selling in 35 days. I mean, maybe like one day, let's be honest. There were 5.2 months of supply on the market, but the most since February of 2019, and up from 4.9 months a year earlier. So months of supply is increasing, days on market is increasing. Pending home sales were down 9.4% year over year, the biggest decline since September of 2023. Also, not surprising, the number of sales that we're seeing on an annual basis has been much lower than what we've seen in the past, 2023 and 2024 actually being record lows. So they go on to talk about how sales are low because it's very expensive to buy a home. We all know that whole story, so I'm not going to go through all that detail. But if we look at what's going on in the Phoenix area as it relates to days on market, we're seeing about 38 median days on market. So this is at the time of a contract acceptance. This isn't from listing until closing. So usually you have another 30 days or so after that 38-day time until you're actually closed if you're the seller, or if you're the seller looking at days on market. Now, this has come down since the beginning of the year, really typical. We usually see our highest days on market during the holidays, Obviously, just not a lot of activity during that time. And then at the beginning of the year, we start to see it come down. But if we go back to January of 2024, so if we head back here a year ago, at the beginning of January, we were at 38 days on market, very similar. And then you see a pretty big drop here. So we're at 27 days on market, 28 days, kind of held steady there until we got into the summer months. So I could see us following a similar trend this year as we did last year, assuming our supply doesn't continue to increase faster or much faster than our demand. Obviously, the more homes you have on the market without buyers to buy them, that means those homes are staying on the market for a longer period of time. So let's look at what's actually going on with active supply, active listings. Those first couple weeks of the year, we started to see active listings piling up. Now, keep in mind, these are not new homes to the market. This is just the culmination of the listings on the market, whether they're new or if they've been listed for 100 plus days. So we saw this starting to increase pretty significantly. And then over the last week, it's been a slower increase. If we look at 2024, it was a little bit of a slower climb as we started the year. Obviously, altogether, our active listing count was lower than it is this year. So we're still seeing this increase, but there is a slight curve showing that maybe our active listings aren't increasing as quickly as they were the first couple of weeks of the year. Now, anecdotally, and as I shared last week, and I heard from a few of you guys in the comments too, other real estate agents saying that you're getting the same amount of outreach. I'm hearing from a lot of sellers right now about listing their homes in the spring. Is it just me, or is this a trend going on? I don't know. I can't verify that. But what I do know is I'm speaking with a lot of sellers about listing their homes. And so if that is happening with other agents, we may start to see a lot of listings hitting the market. So for buyers, keep an eye on that, because you're also going to have a lot of choices. And if there's enough listings and a lot of competition, that means prices could start to come down. Now, we won't see prices come down first. What we'll start to see first is price reductions on those listings, and then we'll start to see seller concessions being offered before we actually see those sales prices ratchet down. But you may have an opportunity to negotiate a little bit more as a buyer. Buyers, if you are looking for a list of homes that have been listed for longer than the median days on market, check the description below. I have a link there where you can get that information. So I mentioned that supply is outpacing demand, and demand is just really not keeping up. Why is that? Well, mortgage rates is definitely one of those factors, and we talk about mortgage rates every week. So let's see what is going on with those. Today, we're standing at about 7.05%. We've been around 7% for the last few weeks. There hasn't been a whole lot of change in the market, except for Friday. There was a lot of movement. It just didn't affect mortgage rates all that much. So what was going on is President Trump was talking about tariffs, and that shook up the market a little bit. So that could have some impacts on mortgage rates. Although, as Mortgage News Daily is saying, mortgage rates stay flat despite underlying market volatility. So these are all things that can affect rates. And generally, when we see weaker economic data, that's when we will start to see mortgage rates come down. So on Friday, there will be a jobs report. Keep an eye on that information, because that could certainly affect the markets and affect mortgage rates. But we'll have to wait till Friday to find out what is going on there. As it stands today, we're around 7%. By the way, if any of this information is helpful for you, consider subscribing. I'd love to see you here every Wednesday, part of our community, as we talk about what's going on in the market. Now, I mentioned that the listing success rate is not looking so great. If you're a seller, the likelihood that your listing will sell, okay, it's not horrible. It's at 69%. That's still pretty good. But it's not what it once was. 82% in May of 2023. Of course, if we go back to 2022, we had 90% range, 93%. We had 80%. We have to go with the exception of 2022, when mortgage rates went up real quickly and sellers decided to take their homes off the market, we have to go all the way back to 2014 to start to see a 69% listing success rate. So as a seller, this is something to keep in mind. If you're just testing the market, these percentages aren't really in your favor. However, if you do actually have to sell and you're motivated to sell, it's absolutely possible. If you're curious about what the listing success rate is in your city, check the description below for a link to request that info. Now, I said I had a glimmer of hope for sellers. We actually saw our listings under contract last week start to tick up by a pretty big amount. So you can see this pretty big jump here. And I also have 2024 on the screen so you can see like what we normally see. Of course, towards the beginning of the year, we do see that listings under contract number start to go up because we start to see more activity from buyers out there coming out of the holiday season and getting listings under contract. But this is a pretty big jump. So it is a little glimmer of hope that the activity is coming back. This is an indication of buyer demand out there because it's those buyers getting out there writing an offer on a property. So we're going to have to keep our eye on this. That is my glimmer of hope for you sellers. Although we're not in a drastic environment by any means, we're just not as strong as we usually seem to be as we start to get into our spring home buying season. Now, speaking of that, what actually happens with sales, right? So we've had really, really low sales the last couple years. We all know that, but I wanted to see like on a monthly basis, what do the trends look like for sales per month and how are we tracking so far this year? So I've got all the way back to 2021 on the screen, but if I take these off, let's look at 2025. Our sales per month is starting the year going down. This is obviously tracking weekly. There's been a few weeks in the year to track, so this isn't monthly, but I wanted to see the activity week to week rather than just looking on a monthly basis since we don't have enough data for this year yet. So this is kind of in line with what we saw in 2024. If we go back to 2023, same thing, 2022, same thing. So we see a dip at the beginning of the year. Why do we see that? Because we are coming off of the holidays where there's less activity. So the actual sales that are closing and being recorded are those that were taking place and going under contract in December, most likely maybe November. So that always kind of dips. But then you see there's a pretty distinct turnaround period here. And we start to see that towards the beginning of February, right? That's where this has been the last few years. Let's take a look. 2020. If we go back to a year like 2014, which arguably was more balanced, normal year for us, we do the same thing, but we started to see this turnaround mid-January. Right now, where we're at today, this is still going down. So I share this because I think this is something we need to pay attention to if we're going to kind of measure or be able to somewhat forecast the trajectory of this year. Are we going to start to see these sales per month starting to increase as they normally do in February, or are they going to continue to decrease and or stay flat? So I'm going to keep an eye on this because I just was asked yesterday, how is the market as we're getting into the spring home buying season? Are we starting to see a pickup? And my answer was no. We're not. And oftentimes we're getting some indications that things are picking up at this point, with the exception of those listings under contract glimmer of hope that I shared. But otherwise, it still feels like we are pretty slow and we have a lot of listings coming to the market. So TBD, we'll keep an eye on sales per month. Now, I had someone ask last week what the median sales price looks like, so I wanted to share that this week. We're at $448,000. If we look back to 2024, we are higher than where we started with the median sales price in 2024. That was at $430,000. And in 2022, we were slightly higher, 23, we were slightly higher than we are today. We were at $450,000. Going back to 2022, we started the year at $400,000, and 2021 started the year at $319,000, if you can believe it. So in terms of the annual sales price or the median sales price, we are somewhat in line with where we started 2023, a little bit higher than where we were at last year. So let's look at the CMI for every city. And agents, if you're watching this, I'd love to hear from you in the comments. Are you hearing from a lot of your clients about listing their homes this this spring? Is it just me, or is this happening to others? I'd like to hear from you. And also, if you're considering joining a team, send us an email. We'd love to talk with you. The Desert Dreamers team is expanding. So let's look at this CMI by city. What the Cromford report is saying is that this table is less positive than last week. There's 8 cities that have deteriorated for sellers over the last month. Paradise Valley, Cave Creek, and Glendale are joining the 5 cities that we saw last week that are moving in favor of buyers. The biggest, or the average change month over month that we saw on this table is negative 0.2%. And I believe that's the first time we've seen a negative number in a few months. So last week, the change overall, the average change was a positive 4.3%. But the week before that, it was closer to, I want to say, like 8%. So it had been declining, but now we are in negative territory, which is not surprising given some of the other information I've shared before this. The cities that are officially in buyers markets: Goodyear, Queen Creek, Surprise, Buckeye, and Maricopa. And everything above that, from Peoria all the way up to Avondale, are balanced markets. Glendale all the way up to Chandler are all considered a seller's market. Now remember, I said the entire valley is now in a buyer's market officially. So that is looking broadly at all of these cities, but each city has a little bit different situation with supply and demand, some cities being a little bit hotter than others. Now the contract ratio heat map is showing that we only have one warm zip code right now, which is Tolleson 85353. That's been hanging there for a while. Now Phoenix 85045 actually has a frenzied market, but that is a very small zip code. They're showing that there's 16 active listings and 19 are under contract. So that's why it's indicating a frenzy. I can understand in a small zip code like that with smaller numbers, you're going to see a little bit more impact on what is going on with the contract ratio. But overall, we're seeing a lot of green, a lot of blue, which indicates that balanced market or cold market. So not a whole lot of change there, and definitely is in alignment with what we're seeing with the CMI. Thanks so much for joining me on this Wednesday market update. I will see all of you again next week.